15 June 2023 Thursday. Today day bull channel day. So mainly first half bullish channel we see and second half bullish micro channel. Okay, let's go for weekly approach. Okay, so as we discussed, okay, so uh, bear bar. So this is today's Friday, last bar of the week if we consider daily candle. So here what happened? Mm, we gave close yesterday, Thursday. What happened is we uh, tried to break last week range, but second half faded by sellers. Now today gap up opening, and we moved towards uh, high of the last week. Look at, okay, this is the 4 hour chart. Okay, so these two bars are of Thursday, bear bar. Today we first half green bull bar, and in second half we broke above last week range. So this is considered as today is considered as a breakout bar for last week range and this week also. Okay. Let's go for overall trading opportunities. Then we will go for bar by bar analysis. Okay. So here is the uh, good swing opportunities are for at the starting of the day. First bar is bull bar. So buying on close and put your SL here after uh, after you are in profit. Just move SL with EMA. So there is first leg and second leg. So this is the good trade opportunity. Midday today, midday what happened is many hourly overlapping bars we seen means that this is price stayed in range, came to midpoint, always touching EMA. So buyers and sellers are equally participated here. So in this bear channel, bears have participated, again participated. This is the low one, this is the low two. We can also see it. So this is the also selling opportunity are in second half. There is the breakout trade which often played by buyers. So this is the also good swing opportunity by putting SL here or SL here. Just move trailing SL with EMA. So this is the also great opportunity. So this day structure is also uh, easily identified. Okay, I have some of the example to figure it out how to find day structure and trade it. So yesterday closed around here price after falling. So I consider it as a final leg. So it will we will see in chart. So this is the faded move by buyers. So what happened is that we consider it as a 0 point, and this trading bars, side bars or range considered as a midpoint of move. So this is the bull channel first move, and in second half we seen that this measured move is completed. So many buyers or all the buyers have traded for it. This is the best buying example is often occurred in our day structure view. Okay, so we will also consider that how to take entries here, midday approach by midday approach and fading approach. uh, okay, let's go for bar to bar analysis. Okay. Okay, so this is 5 minute chart. Okay, so yesterday what happened is that this move is faded by sellers first move, then second move. Okay, now what happened if you consider this? Okay. So here what happened is that this is the considered as a trading or trading range. Okay, so price always tried to come to the midpoint. So this is also measured move here. Yesterday we seen that. Okay, so now in upper range we tried to break out and it faded by sellers. In further continuing this bear bar, what happened is that it also break down, and chances are high that this is the faded by sellers, so this sell move is also faded by buyers. This is the idea. Okay, so today gap up open, then trading in range, and then again move to the breakout point or all all day breakout and yes last week breakout. Okay, so this is the idea to be traded today. After seeing this, what you can do is just place somewhere order here, or after any bull bar, good looking bull bar, you can trade it. Okay, let's consider beginning of the day and how you manage your day. First bar, bull bar. So let's look at the probability of first bar closing trade. Okay, here if we bought here closing on first bar, so what are the this is the measured move for to make profit. Or what we can do is in this type of day structure, just move your SL with moving average. Okay, so this is the good trade in first hour, in first candle 5 minute, to buy on close. Okay, so here we yesterday we seen that this is the faded by buyers. So if you sold here, your target will be around here. But if it is not for it got followed through, disappointing candle. It's tried to break down but not able to. So this is the confusion candle. So it is faded by buyers. Here, what happened is that second candle is tried to go down, but buyers are there and bought here, and it continued follow through in third candle bull bar. Okay, here is the also one example that measured move. So we can trade it for measured move. Here is also good example. Then we can trade it for measured move. Buy on first candle. Okay. So this is the if we traded here after this view, this is the wage pattern. So we have to exit it here. So here doji candle. Here also if we bought here, just move your SL here. You can trade it for opening measured move. Okay, so in 10 of if we consider it as a 10 days, so we just buy or buy or sell on close of the candle in that direction. So if we consider it, so 1 and 2, these two days are there, we face the losses. But if you manage well, you can get out at break even point. If you figure it out that what's gonna happen, if you see this is the SL for if we want to trade here, so this is the large SL, you can ignore it as well, and it is easily seen that this type of move is not going to happen. Okay, so you if you traded here as well, you just manage. If you trade here, exit or some in this green candle, Okay, so your SL is not very large, or if you exiting on loss, so it this loss also not very large as compared to we are getting profit here of measured move. Okay, so first candle, bull bar candle, buy on close. Second candle is not a followed good follow through. Third candle which broke the first two candles range, so buy on close. And fourth candle which breakout candle, buy on close. This after these three consecutive bars and it closes on its high, so we can consider it as a bull channel. Some type of bull channel will occur. Or if you not getting much idea, you just what you can do is we can trade it for first leg and second leg. So this is the most high probability chances are there. Look, here also same happen. First bar, green bar, bull bar, buy on close. After seeing these four candle, we can assume that this is the bull channel. Okay, so we can trade it for first leg. If sellers are not dominant, so then chances are very high that it will create channel. So it is channel created here. First, second, third push are there. So this is the probably second leg. Okay, so same view traded here. So this is the first leg where we seeing three consecutive bars. Okay, so if you traded here or traded here, uh, just don't exit. Why not to exit? What happened here is that this move is faded by buyers. So if you entered here or anywhere here, this is the exhausted candle. Here we didn't see any exhausted candle. So better idea to exit somewhere around here. Okay. Here no faded moves happen. This is the bull bar. Idea is to trade it is that we trade it for first leg and second leg. So our problem is why not to enter here. Okay, this faded move. Why we can't consider it for reversal trade? Okay, so faded by sellers. Okay, so first view is that this is the weak weak structure. If we consider weak candle or weak bar, so this is the midpoint. Okay, we started somewhere around here and it open around here. So chances are very high that we chase for high of the week and just also last week high we broke. Okay, so we can trade it for first leg or second leg. It is the first approach, and then in mainly in first, second, and third candle you can easily see that that move is faded or not. This is the trending bar, so it increases chances that this channel will not be faded by sellers. This channel is of buyers, so buyers will trade it. Sellers have equally after seeing these three candles, so we conclude that sellers have also same space for first leg, second leg, but channel is of buyer, so we can trade it for buying channel. So I somewhere around put order on third closing. I exited somewhere here. Okay, I again entered on 12th candle. Okay, so this is also if you will look micro channel, bull channel, micro bull channel. Okay, so this is also good idea to trade. How? Look, buy on close, buy on close. You see this is disappointing candle for buyers. Okay, so after seeing this candle, you can exit. What you decide is if I am getting good looking bull bar or buying closing on its high, I will trade it. I will again trade it. So this is the bear bar, bear bar, bear bar. This is good looking bull bar. After seeing this bull bar, chances are very high that we will chase again this range. Okay, or this is the somewhere like channel. So this is the low of the channel, we can trade it. And another chance is that this is the first leg. Okay, sixth, seventh high is first leg, and after 12, this is the second leg. Okay, so these are the two good buy opportunities. If you entered here, not exited here, just scale in here, put your SL here or EMA. After seeing these bear bars and 18th bar, you put your SL here. In 18th bar, you will exit it. Okay, this is idea to be approached. So okay, let's continue. 12th bull bar, buy on close. 13th, 14th got followed through, which is not bear bar. So chances are very high that we get another breakout type candle, good bull bar. So 15 is bull bar. Here in this four candle, sellers also traded for scalping. So if they entered here on 12th, 11th closing, in 10th closing, uh, what thought they thought for fading move. So we can't go above yesterday's high or week's high, and we fill this gap. So there, these are main two reasons for them. Okay, and it is good reason. So what they can do is after seeing green bar, just sell on 17th candle or 16th candle again. Okay, this is the bear channel. Put your SL here. 18th bar also sell on close. This is the micro bear channel. If you, I will see that. Okay, so somewhere around here or at the moving average, this is the midpoint approach, and you can exit here. This is the bear channel. Look. Okay, so participating is here. It is also not good bad approach. We can trade it for 2 leg move. Now this seller's move is not uh, strong. Okay, if you see that every breakout have new buyers, every breakout have bull bar, and there is no in this area there is no consecutive bear bar. So if this is the good looking bear buy, sell on close, here not got followed through. It's in channel, but weak channel for sellers. So after seeing this 26 candle, which is breakout to the EMA candle, whoever bought here, after seeing this candle, buyers will exit here. Okay, there is also high chances that we sell on 26 candle because this is the faded move, looks like faded move here. Observe, clearly observe with that 22 candle closing above EMA and 23rd candle which is breakout to the EMA. Same looking candle happen here today. Okay, but our view is correct that today bull channel will occur, and I have also 2 and 3 examples are there. Same pattern happen first leg, second leg. Sellers also have this type of bear channel. I have same example. We will see that. Okay, so what if you have traded here after seeing 27th bar? I will clearly discuss about both side trade. Okay, let's first consider selling trade. After seeing 26 on close, if you sell on close, or if you participated somewhere here and not exited on 26 candle, after seeing 27th candle, this is the bull bar, which is not good signal for this weak bear channel. Look here, this is how strong is bear channel. There is no good looking bull bar. What happened here is that no consecutive bull bar and bear bar, so this considered as a weak channel. After seeing 27th candle, If you traded somewhere here, best to exit here. If you sold on 26th close, scale in again at 28 and exit somewhere here on 29th this week. Okay. What I personally traded is, after seeing 27 candle, I do not sell on 26 because this is the weak channel. I observed that this is the swing low. Okay. So it's not going to break. This is the exhausted move in this channel. Look how these candles are, and it largest candle. It acts as an exhausted candle to this breakout, and very next candle which closed on EMA. So buying on 26 candle, it is the right approach for channel trading range day, and we will further move to the high of the day. Okay. So 28th, I put SL here below 26. So I just stayed in, and this is the measured move which occurred. Okay. Okay. Now 30 candle, which is the breakout to the EMA, buy on close. 31 candle bull bar, buy on close. So it also act as a micro channel in these ranges. Okay. We can trade this, we can trade this, we can trade this. Here if you traded first candle or for third candle, if you not exited or just closed your PC, it is the best idea. Put your SL below first low or price to price uh, in first close. Just stay in for long time. So it is also good approach. So you see that buyers also are in profit, sellers also are in profit. So this here we see that both look, buyers and sellers both look. Okay. So 35 candle which is faded by sellers. So one idea, it is confirmed that at midday price will just move around moving average. We can consider it as in 15-minute or in 1 hour chart overlapping. Okay. So best idea to trade here is that uh, buy on low and sell at high. Okay. So here is the good approach. Here is the good approach. Buy on low. This breakout is not going to happen. This breakout not going to happen. So this is the good range to capture here. Okay. If we consider today's range. Okay. Let's see that. Okay, this is the 55 point and total is 134 point. So it is also considered as a big bullion day, Friday gift day for bulls. Okay, this is the last day, breakout candle. Great trade can happen here. Just uh, what you can do is just put your SL and consider it as a always in position, and always in position is good approach for this type of thing. Okay, so let's continue. This is also sellers measured move. Okay, so sellers faded here, same equally space given for sellers. So here interesting to think, watch it here is that this first leg and okay, and this is the second leg for sellers, because it's not breaking high above it. This pullback is go longer. So this is the consider as a low one, and this is considered as a low two. Low two is good buy signal, which is 42 candle bull bar. That now breakout not going to happen. So buy on close 42 candle. 43 is, looks like faded move by buyers. Buy on close, and this micro channel continued to the midpoint EMA. Okay. Here what you observe is that every bar have close or low touches the EMA. Okay. Now what happened is that sellers have tried to break down prices. This bear channel is also not very strong. Bought here, tight your stop loss somewhere here. Sellers tried to enter here. Okay, this channel is faded. This channel is not going to break high. So sellers is faded head, and in this 55 candle, sellers got probability of one another consecutive second bar, which is the good looking bear bar. Sell on close. Below EMA, breakout can happen. Okay. Very next bar is 58 bar. So 57th bar and 58 bar. It is observing and it is the breakout trade. How? Because it is a 2 bar reversal trade. Look, sellers have faded it. Now this bull faded move, which is closing above bear bar. Okay. So it clear indication that market will not further go down. Okay. If you have put stop loss here, just move stop loss here. If you see this move, 57th candle, buy on close. If you looking for another opportunity, let's say you are not trading for this micro range. Okay, you are not sure that breakout going to happen or not. What you can do, just wait. Okay, 58th candle, consecutive bull bar, follow through, good follow through for bull bar, and it just retesting breakouts. Okay, these breakouts retesting next bar, consecutive bar, which is closing on above its high. Low is above previous candle low. Okay, it also good looking bull bar, buying on close. This is the pullback. So here two flag happen here, and 60 candle, which is the breakout candle of whole week and whole 2 days move. Okay, now after seeing this four consecutive bar, it is the two idea can be traded here. First is to buy on 16th close, move your SL to here and just wait. If prices will go down or somewhere around retest it, we buy again. Okay. This is the first idea. But if you observe that this is the okay, if you put SL here, so it is 33 point SL, and in this after seeing this range, you can't consider as a good risk reward. Okay, what you do, just uh, you trade it for one half your position or one third of your position. Okay, if you are trading 4 lots, you just put order of 1 lot. You see, if you see that, if you what you have to do is just scaling approach. Put your SL here, put 1/4 of your order here, and participate in this channel. Okay, 60 buy on close, 61 is also buy on close. It is the two good breakout bars. Okay, if you traded somewhere here, just move your SL to below bull bar or breakout bar, or just move SL with moving average. If you see this candle moving average below this breakout bar, after seeing this candle, you just move to SL somewhere here. 62 candle, uh, it is disappointed candle who bought on 61 candle. Okay, so this is not selling candle. 63rd candle, which is the bull bar, but it tried to trade it below this. If you are exited here, just again enter here, put your SL below this. If price further go will down, I will exit. And so staying in is good approach here. You don't exit, just put your SL here. Or if you are taking entry here, use the idea of scaling. It is the best in this days like this. This is the Friday. This move is structured move. I will show you example. Okay, so if you not participate in this micro channel, after saying 64th candle, you can enter here. Okay, just in this portion, market order, enter with market order, put your SL below breakout or EMA moving average. It is the best idea to trade. Okay, buying 64th, buying 65th, even 5th, 65th buying, we don't know how much is going. If you have idea that this is the measured move, okay, so put low of that 0, this range as midpoint 100. This is the measured move idea. If you're trading it for 65 fifth candle close and you are figure it out that this is the measured move, buy on 65th, buy on 66 close, buy on 67 close, 68, which is the reversal bar after appearing measured move. So it easily observing that now buyers have uh, exited or they booked profit. Okay, 69 candle, which is the bull bar, again consecutive bull bar, and 70 candle, which is faded by sellers. So put your SL here, or if your SL anywhere here, or you are in case you are not exited, so close after 70th bar. So that's how you can trade here. So in these three candles, computers have exited that two consecutive bar, exit here, first candle, sell bear candle, which is closing on its low, exit somewhere around here. Okay, so that's how it is good idea to trade. So important lesson or today's lesson, I not participated this really. I got missed it. I just overconfident that this will end somewhere around here or here. This not gonna happen. I have no idea. I have example like this, but I didn't figure it out. Okay, but I will not forget this day in future. I often say saying this that after 3 o'clock or after 2:30, this type of move is going to happen. I have seen this type of days. That whole day it traded in ranges, and in last 30 minutes or last 45 minutes, breakout going to happen. Okay, so in this type of day, best idea is to figure it out how day is going to happen. Sellers and buyers are equally opportunate. They will trade for their space. Okay, so after, if let's say, if you consider, let's say, uh, if you sell on this candle 56 candle, so after seeing 57th candle and 58th candle, you just move your SL to somewhere here or exit here. Don't figure it out that my SL is around here or around here, because it is the two bar reversal. In anywhere around here, price not gone below moving average and sustainable. Look at this. This is the bear breakout below EMA and faded by buyers. This is the gap, EMA gap, faded by buyers. Again try to break out and faded by buyers. So it is not best idea to trade for short position in this day. Okay, you can trade it for trading range. Okay, how trading range approach can be traded here. What you do after seeing this, what you do, if prices come to near its this portion, I will buy it. So buying here, sell on high. If you bought here, sell at high. Okay, or sellers will trade here for selling position to test the low of the day or midpoint of the day. Now again buyers will come and fade it. So price try to come at the midpoint. Okay, good. There is one concept also that this is the 30% probability trade. The breakout will happen, have only 30% chance. 70% chance have price will stay below it or just uh, swing to another low. Okay, if you are sold here, it will come to this point. If you buy here, it will come to this point. Only have 30% chance that breakout will happen. So for breakout, what you can do is every low you can buy it and every high you can sell it. If you see that 61 candle, buyers have no chance to fade it. Okay, 61 candle and a 62 candle, which is the bull bar, where buyers not given sellers chance to even enter here. Okay, so trade here, buy, sell here, and at the end you will get high probability trade, which is the 30% chance of going to upside, which happened today, and it is the breakout trade to 3 consecutive bar, which is the sign of breakout. So great lesson today, great chart. Okay, let's consider more example on here and our trade setup, which is the okay. So one way of trade, all day structured. Okay, so in our journey, I have seen, we also discussed more than 3 4 structure today. So today is another new structure where measured move happened from yesterday's low. So this is the buying structure. What we are approaching is here is uh, wedge pattern and midday pattern. We finding wedge and midday approach in all type of day structure, and we are not missing any trade. We try not to missing any trade. Okay. Yes, recalling just what happened uh, yesterday. So this is the midday price trade. Okay, so faded by sellers. This is the EMA breakout, retest of EMA. You, if you not entered here, just enter below EMA breakout, put your SL here. This is the 2 bar reversal candle from midpoint. Buyers want prices to go up. This is faded by sellers. Okay, mid pullback type pattern. Here wedge pattern happen at starting of the day. It is also considered as a wedge, but not in the this idea. This is triangle, somewhere look like expanding triangle pattern. Every breakout is faded. Like this is the buying breakout is faded. This is the selling breakout, it is faded, and this again buying breakout is faded, which price gone above previous first leg, faded by sellers. So expanding triangle pattern. This is the wedge at starting of the day. In smaller time frame, 1 minute, first leg, second leg, the third leg. This is the starting of the wedge. So we can consider it for a wedge pattern. After seeing this bull bar, we can enter here. Okay. In today's chart, if we closely look, so I didn't observe any wedge pattern. Okay, this is considered as a, we can consider it as a wedge pattern. So put high, 3 pushes are there, 3 consecutive candles are there, but it is not good looking. So we didn't take it as a wedge pattern. In midday approach, so price stayed just around moving average. But if you consider it, that we will figure it out how moving average acted, price acted to moving average. So here is a good example that I also discussed. Price are not very much strong below EMA. Okay, it is faded by buyers. Buyers have dominant role above EMA. If you look, EMA buying 2 legs are happened. Again try to up. This is the weak buying channel. It is faded by sellers, but 2 bar reversal, which is the good sign that price will stay above EMA, or we will chase the high of the day, or even breakout chances are there. So trading here, around 2 o'clock, it is the best idea for to approach. uh, After if we master this EMA strength, it will occur in 80 to 90% day. Okay, so if you figure it out here that this is the 2 bar reversal, tried to break below moving average but not able to, very next candle which again fill the gap and came higher, again same happen here. So if you traded here and put your long SL to somewhere below this swing, you can stay in this micro channel. Very good uh, trade can be happen here. Okay, okay, let's see this type of day or how we unfold starting of the few patterns. Okay, after seeing this first leg, how we can conclude that or unfold the further day. So here is the example. uh, from starting point, uh, range happened, trading range, buying on low, selling on high. So in second half, there is breakout happened, a retest happened, and this further continued. This is 5 minute chart. Okay, so this is the one of the example that uh, large move occurred on around 2 o'clock after retesting of EMA. Okay, so this is also example. Uh, After seeing this day structure, that price is not going up and down, so we can consider that scenario as well. Look, before 2 o'clock it happened, and just 2 o'clock or 2 or 15 breakout happened. So also this we consider it. Okay, after seeing this first leg and these 3 consecutive bars, so here is the example that 2 consecutive bars are there. First leg, we move on for channel of the day and second leg. So it is the good idea to buy on this bull bar. Okay, good looking bull bar that we will further go high above the day. Okay, in this channel also same happen that this is the wedge created here. Uh, Again, sellers tried to broke down below EMA. So sellers got first leg here, sellers got second leg here, and further move upside go on. So same thing happened today. Let me copy this chart. Sellers have space for first leg, two leg. So this M type structure is same happened here. So we can survive here. Okay, there is no big deal that if you sold here and you not exit and wait for days lows grow broken. Okay, this is the history. It's proven that if sellers are not dominant, so second L2 will occur and buyers will further show up. So this is the faded buyers faded the move and not price not gone below EMA. Okay, so we can easily figure it out. This is also same structure. So I also figure it out that this buying channel will continue. Okay, so first leg completed here, second leg completed here, against buyer will enter. This is the good looking bull bar, this is the good looking bull bar, this is the good looking bull bar. Buy on that bar is the main approach, good approach in buying channel. So selling on high happen, buying at every low happening here. Same today happen, selling on every high, buying on every low. This is the breakout here. Sellers not even got chance to trade it. There is one idea to sellers traded it. Let's say sellers put order at a breakout of this candle. How look if price go above this high, they sell it for it. Sellers put their order here, but after seeing this, and this is the best idea to exit here for sellers. Okay, so sellers may enter here, but this is they are scalpers, mainly scalp for uh, selling side. So it's not for beginners, or if you finding swing trades, so avoid it. So there are swing trades opportunities are there, good. Okay, one more example, consider it. Same happen, three consecutive bar. Again we chased the two high in the hope for days high got broken, channel may happen. Okay, so this is the also unfolding chart. So this is also trading range. Okay, but here they maintained the price below EMA and breakout candle, little pullback, and again succeeded to breakout. Okay, so this is the around 1455 candle. So this is one more example that second half breakout happened, but it is very late. Okay, so if you look moving average, so they maintained to close price below moving average and got followed through. So here is the also one example to consider it. Okay, 14 candle, 14th slide. Okay, 3 4 consecutive bars, sellers have space for which we can chase it for 2 leg high. Okay, so this is the gap down scenario. This is also I taken one more example. Here is the odd day. This is the very um, long range day. Sellers have traded for 2 legged, 1 leg, 2 leg. Again buyer will come for this first leg and second leg approach. Sellers have also faded here. So this is the trading range approach, buying on low, selling at high. Every breakout will be faded. So this is the breakout is going to fade. So you can also consider it here to figure out the same structure is here. Uh, Sellers have 2 leg, 1 leg, 2 leg, buyers faded it. Price stay around moving average. Here interesting truth is that price stays below moving average and maintaining their space here. Look at this. This gap is traded. This buying channel is not good strength. So here participants are sellers dominant. So sellers have bear channel. Okay, look at this. So this can be also considered bull channel day. Okay, this is the best example for today's chart. Okay, from starting they got 2 consecutive bars. This is the gap down scenario, but it is traded in channel. So I also figure out that I am sure that after opening this type of channel after measured move, we trade for second leg and we even may stay in channel. So this SL or this moving average below this moving average we gonna not chase. Okay, here look, first leg, second leg below moving average, gap got filled by and faded by buyers. Buyers traded it, again sellers entered. Also they have faded it. So it is the trading range. And in 2 o'clock, at just 2 o'clock, same breakout is going to happen. Just difference is that this is the our today is the gap up scenario and buying channel is there. This is the gap down scenario and buying channel is there. Okay. So after seeing this uh, trading range, I just figured out that it is the I will not forget anymore and make this type of mistake. Uh, this is the best idea to trade it for second half. And okay, so it is the measured move, easily can be captured. In this type of day, we can capture up to 120 point and 130 point in Nifty very easily. Okay, let's say if you just all the day not traded somewhere here, and if you just buy on this any candle, you can easily capture 50 to 60 point. Okay, it is the easiest trade. Or if you are mastering trading ranges, okay, channel trading. So if you sold here, buy here, sold here, buy here, it is the best approach to trade. You can also make this trading. I in this 130 move, I didn't consider it in this overlapping bars. This is the 30-40 point overlapping. look from 782 price approach to 750. It is the 30 point down move channel, 30 point up move channel. I participate in 30 move up channel. I participated in 30 move up channel. I also bought here, exited somewhere around here. This is the 20 point. I missed this opportunity. I didn't figure it out. Okay. So this is the type of day structure. We can identify how we can identify. It is the my idea of way of trade. So okay, Friday, good day. And end of the move is who traded end of the move in buying. They are gifted by markets to trade. Okay, so all the week move are also covered in last hour move. Okay, so always uh, do analysis for always in approach and uh, do homework. Okay, thank you.